Hello, everyone. I am CA Sanjana Mishra, working as the lead financial consultant at BISP Solutions, having 6 to 7 years of hands-on experience in most of the financial and accounting domains, with financial planning and analytical problem solving as my forte. BISP Solutions is a tech company providing technological solutions worldwide. So, we, as your tech partners, have a far flung proficiency in end to end implementation and support in Oracle EPM solution stack. It includes S-based planning and budgeting, financial consolidations, and account reconciliations. We have served more than 35 countries across the globe with more than 50 projects delivered to happy customers. Today's session is based on factored receipts reconciliation using the Oracle Account Reconciliation Cloud. So before we move on to Oracle Reconciliation Cloud, let us just get a glimpse of what are factored receipts. Factored receipts are basically when you are working in a credit based environment where you provide credit to your customers, which is very obvious in our normal working of our organization. So what happens is the companies get their account receivables factored by a factoring company, who is known as a factor, and it is actually the account receivables are actually discounted at certain rates, be it 2%, 3%, the normal rates that are prevalent in the industry. And at the time of factoring company advances 70 to 90%, with 80% as the usual prevalent percentage in the industry, and of the invoice to the company. And as the account receivable or the customer pays, the rest of the amount is paid to the company by the factoring company. So what happens here is that the main reconciliation that needs to be done is for the due from factor or the factored receipts, as the entities may use it as and when it fits to them. So we are using here due from factor, but I'll also be using factored receipts in this case. So usually this due from factor amount, that is the remaining 20 to 30%, whatever is the terms of factoring of your organization with the factoring company. So this due from factor amount needs to be reconciled and needs to be allocated back to the bank or cash or whatever. So you need to settle this account at the end of your month or at the end of your quarter, semi-annually, or whichever fits in your, and whichever frequency fits into your company. So as you can see that at the time of factoring, the entry passed is bank and cash account, due from factor account, loss or fees, that is 2 to 3% fees that is charged by the factoring company to the accounts receivables. And when that customer pays to the factoring company, the remaining amount is paid to the remaining amount is paid by the factoring company to the company. So basically this just a moment, this bank or cash account to due from factor account, this is the due from factor account is what needs to be reconciled. And in order to reconcile this, you have your own account of due from factor that is maintained by your business accountant or financial consultants, whoever experts that you hire in your organization. And then you have to cross check it or verify it as and when the payments are received by the factoring company from the customers with the factoring company. So you need to verify it on regular basis. So this is something that needs to be done by the company on regular basis with the factoring company, this verification and all of that. So you need to check on your factoring company again and again simultaneously. So every factoring company has a different way of informing their entities, that their customers, that their account receivables have been paid or not paid. Some provide you with a statement of factors, some provide you with just a tabular format of your factoring or whatever. It is dependent on the company, but a very normal basis of working is they provide you with the statement. So what you need to do is, as in when you get the statement, or if you're not getting a statement from a factoring company, so as in when you have checked it on your factoring company, as in which invoices have been paid or not, so you maintain an Excel sheet for that, and you actually cross verify this due from factor to that Excel sheet or the statement that is provided to you by the factoring company, and you reconcile it and zero balance the account. Zero balance the account in the sense that at the end of that reconciliation period, maybe the month or at the end of your quarter or semi-annually, you bring the balance to that account as zero, because either the amount is going to be paid or it is not paid. So that account will actually become a zero balance account at the end of your reconciliation. So this is what we usually do in our reconciliation for factored receipts. I've also attached this flow chart for in easy understanding of how does this factoring works. We're not going to get into the detail. This is just for your reference. Now, when we are, let's just come down to account reconciliation software. With account reconciliation software, this automation is actually done by the software only, as in the frequency decision, the risk rating. You can just assign one time to your profile, and it is going to evaluate it basis on whatever factors and whatever features, whatever points that you've added into your profile, and will present that reconciliation in front of you, so that it is easy for you to verify as in how much amount is left for the factoring and what is the amount that you need to reconcile with the statement of factor that is provided to you by the factoring company. So it makes it very easier for you, and you can always have it handy at your software, where you do not need to invest much on the hardware because it's a cloud service. So let's start it with here. Let me just help you with the profile that I have created for that. This is the profile that I have created for my factoring receipts or due from factor account, whatever you fit it, whatever you fit to call it as. And as I've told you that it will be a zero balance account, where the account analysis method will be used, where you're going to analyze around which receipt has been paid, which has not been paid, which invoices have gone to bad debts, or which are going to be paid, or whatever. It depends on your transaction with the customer. So this is where I have provided this profile, and I have attached a rule to this profile where it is going to auto submit if the difference, that is the functional difference, is less than 5,000 USD. So depending on my past experiences in my organization, I have I have actually got down to a conclusion that usually 5,000 USD is a minimum amount that occurs due to certain pieces or loss or something like that. So it is not very material in comparison to the other amounts. So it is not a very material reconciliation difference that needs to be focused on so much at the moment. So this is what an auto submit rule for the reconciliation I have provided. So if the difference between the source system and the balance explanation, or the difference is less than 5,000 USD, it is going to auto submit the reconciliation to the approver. Of course, I've not attached an auto approve rule, because since it is automatically being submitted, so at least the approver should go through the reconciliation. This is what I have perceived. This is my perception of doing that. You can have your own. And the workflow, as I have decided, is Frank Taylor, a hypothetical name, is my preparer, and Amy Martin is my reviewer. So this is my profile. I will help you with the format that I have used, as I asked you that it is a zero balance account format that I'll be using. So this is the source system, where I will have the factored receipt balance, that is the due from factor account balance. And this is the balance explanation, as in which of the receipts have been paid, which have not been paid, so as to bring it down to 0. And this is all the normal uh, things that we put in our format. No rules have been attached to this format. I have just attached a rule to the profile. I prefer attaching rules to the profile because formats are used in different profiles. So this is my perception of doing it. Again, you can have your own. Now let us just upload the balance. Before uploading the balance, this is the format that I'm going to use to upload my balance into my system, that is the ARCS cloud. So it will have 3 columns, that is reconciliation account ID. In our case, it is 3031 FRAR. Currency code, it can be USD, Euros, Yuan, or GBP, whatever, INR, it totally depends on you. I am using the functional currency. We've got 3 currency codes here, or rather 3 currency entered, function, and reporting, which are provided by the ARCS application, making it more easier to use. I'm using the functional currency, and functional currency in my case is USD. And the amount, whatever is the amount of my particular account. So this is my file that I'm going to upload. So the amount that is to be shown is 40,000 USD. Coming back to our cloud, I am preparing a reconciliation for the period April 2019. It is already open. I am just going to import my balance. This is my file that I'm going to upload that we've just seen. Balance type is source system. April 2019, the period is correct. And I had informed that my functional currency, the USD, so I'm using the currency bucket as functional, and it is a comma delimited profile. And I am going to just import it. So my importing of the data has been done. Let us come down to our profile that we created and create a reconciliation for that particular profile. For the period April 2019, because we are using on creating a reconciliation for the period April 2019, I'm going to create reconciliation for this particular profile. Of course, I can create reconciliations for other profiles also from the periods tab, but since we are only focusing on this particular profile, I'm just going to create a reconciliation for this particular profile. Now, moving on from here, we are going to jump onto a reconciliation card where we'll be looking at our reconciliation for that profile. So we've got down to a reconciliation card. Let us just find our profile, which we'll be working on. As you can see, my balance has been uploaded to the source system as 40,000 USD. And on the workflow, we have seen that Frank Taylor is the preparer for this particular profile. So let us just prepare a reconciliation also for that. So I'm going to just sign out as an administrator and sign in as Frank Taylor. So as you can see, I have signed in as Frank Taylor, who is the preparer for my reconciliation for factored receipts. I am going to go to the reconciliation card, change the period if the period is not April 2019 in my case, but since it is already there, so I do not need to change the period. Let us directly go to our reconciliation ID. So here, as you can see, that this is the summary where we have a source balance of 40,000 and there are no balance explanations provided so as to zero balance the account, that is bring down the balance to that particular account to 0. So here what I am going to do is As you can see, this is an Excel sheet that provides me an insight into uh, what was the factor payment, when was it received, what was the account receivable or the account receivable receipt number, what was the remaining amount that needs, what that was due or that was showing into my factored due from factor account for that particular receipt. This was the transaction number, and this is the total amount of my accounts receivable receipt. So as you can see that remaining amount of 40,000 has been recovered from these four factored receipts. These are the four factored receipts with whom my 40,000 was due, and after they were paid to the company, factoring company paid the remaining amount to me on these dates. So this concludes my 40,000 of amount. So what I can do is, I've got two options. Either I can add all those four into my description, or I can just attach this Excel sheet to the reconciliation and ask the reviewer to review the sheet with the explanations that are provided to it, uh, as the Excel sheet is self-explanatory. So the reviewer can review the Excel sheet and just prepare the and just approve the statement of that is reconciliation of my due from factor or factored receipts. So let me just add the factored payments as my description. I have provided with a short transaction date, and here I am going to attach the Excel sheet attached. Okay, I'm so sorry for this. So I am going to just to do it in the most easiest way possible. I am providing an amount of 40,000 with the uh, explanation, and I am attaching the sheet to this because this is the most easiest way of performing your explanations. This was my sheet uh, that was there. This is the sheet. I have attached it, and now I am just going to save it, where I've got one balance explanation and no unexplained differences. So the reconciliation has been created, and it will be submitted by Frank Taylor, and it is going to be reviewed by Amy Martin. Amy Martin will be, as you can see now, the status shows open with Amy Martin, who is the reviewer and who is going to approve this reconciliation and close the reconciliation after looking at this Excel sheet that is attached. So as you've seen, this is the most easiest way of reconciling. It didn't took me more than 7 to 8 minutes in reconciling this amount of 40,000 that would take otherwise while reconciliation time of half an hour or so for this small amount, and that too when time is money. So that was it from my side on ARCS factored receipts reconciliation. And in case of your doubts or something, and if you need to have certain consultation for the ARCS application, you can of course get back to us at www.bispsolutions.com, as we'll be happy to help you. Thank you so much. Have a good day.